Well, our research investigates whether a firm's carbon risk exposure affects the relationship between dividend announcements and stock returns. This issue is actually highly relevant for many stakeholders because it adds to the growing body of literature on environmental finance. It also provides insights for corporate managers on how carbon emissions influence investor behavior. And finally, it highlights the implications of carbon emissions on financial markets, thereby emphasizing the importance of sustainable business practices. We conduct our study in two stages. First, we analyze firms' carbon emissions, stock returns, and dividend announcements based on a comprehensive data set. Then we examine how the stock markets react differently to dividend announcements from high and low carbon emitting firms. Our findings show that firms with high carbon emissions experience a stronger association between stock returns and dividend payments. It means that investors pay more attention to dividend announcements when the firm has high carbon emissions. Regarding the stock markets, it reacts less positively to dividend increases and more negatively to dividend decreases for firms with high carbon risk. More importantly, our results documented evidence of carbon risk underpricing. When firms do not have accurately priced their carbon risk, the market reacts unfavorably to dividend changes. Our study has both theoretical and managerial implications. It advances the theoretical understanding of how environmental factors and specifically carbon emissions affect financial markets and provides evidence that carbon risk drives investor behavior. From the managerial perspective, corporate managers should consider carbon emissions and their associated risk when making financial decisions. Transparent reporting of carbon risk and sustainability integration into business strategies can lead to more favorable market responses to dividend announcements. Long story short, our research highlights the critical role of carbon emissions in financial decision-making, thus offering valuable insights for investors, corporate managers, and also policymakers who aim to foster a more sustainable and resilient economy.